Good morning. It is Thursday. It is the Bubba Show. Now, for months I had said that this doesn't matter and this number doesn't matter, but I do think at this point there is some importance to the jobs number. And again, it's not going to make me make a trade off of the number, but what I want to see is how we're building forward to the next big unemployment number. So it has a little bit of meaning. It's not nothing we're going to trade off. But today, I wanted to spend the time talking about earnings season and what it means and what we're looking for. This is, as I had mentioned earlier in the week, this is a big week for a lot of big stocks, and a lot of the financials either reported last week or are reporting this week. And, you know, bull markets don't continue without the aid of the financial stocks. Bull markets will not continue if we don't start to get some better earnings. Now, we're seeing a lot of beats, but the beats aren't big enough. Remember, markets have a way of pricing in the overall action. So the earnings season, although very short and very young here, as it is just 2 weeks old, is not off to an overly healthy start. Now, I'm sure that you'll hear the pundits telling you how good it is because we're making beats. But we have to make some substantial beats here because we're beating on weaker than expected numbers. Remember, you know, how the take on everything is. And when earnings season comes out, now expect a lot more volatility. But I would expect you, now look, if you see, for example, if you see a major miss in a major company, like an Intel, like a Google, okay, like a Goldman Sachs, this could be the news bomb that actually turns the markets over and has them start to sell. Now, I don't want to come off as being bearish, but you can see that right now the warp frame, the warp sense, the warp mind of Wall Street is saying, well, look, if we keep getting bad news, if we keep missing earnings, then Uncle Ben and his merry men are going to continue to try to liquefy this market, which for you and me, we get no liquidity. Okay, it only benefits the Mr. Potters of the world and the 1%, which takes the money out of the bank's balance sheet. Eventually, these companies have to come with real earnings and make real money and put real jobs back, people back to work. Because we've seen this movie before, when they're not making real money and when the earnings are not meeting up to real expectation, you can see that this whole theory of bad news being good news is not going to work. So just keep this in mind when you're watching this. Again, we're not going to trade off these numbers. We're looking for the charts to give us an idea and a direction of when the right time to get in is. But these are the warning signs in front that we talked about when we talked about the state of the market yesterday. Keep an eye on them. Be aware of what's going on. And for Thursday, the Bubba Show, have a great day. We'll talk to you Friday.